you will have increased your ability to make more money as well as your financial intelligence. So many times I have gotten into financial hot water and used my brain to create more income while staunchly defending the assets in my asset column. My bookkeeper has screamed and dived for cover, but I was like a good soldier defending the fort. Fort assets. Poor people have poor habits. A common bad habit is innocently called dipping into savings. The rich know that savings are only used to create more money, not to pay bills. I know that sounds tough, but as I said, if you're not tough inside, the world will always push you around anyway. If you do not like financial pressure, then find a formula that works for you. A good one is to cut expenses, put your money in the bank, pay more than your fair share of income tax, buy safe mutual funds, and take the vow of the average. But this violates the pay yourself first rule. This rule does not encourage self-sacrifice or financial abstinence. It doesn't mean pay yourself first and starve. Life was meant to be enjoyed. If you call on your financial genius, you can have all the goodies of life, get rich, and pay bills. And that is financial intelligence. 6. Pay your brokers well. The power of good advice. Sometimes I see people posting a sign in front of their house that says, "For sale by owner," or I see people on TV claiming to be discount brokers. My rich dad taught me to take the opposite approach. He believed in paying professionals well, and I have adopted that policy also. Today, I have expensive attorneys, accountants, real estate brokers, and stockbrokers. Why? Because if, and I do mean if, the people are professionals, their services should make you money. And the more money they make, the more money I make. We live in the information age. Information is priceless. A good broker should provide you with information as well as take the time to educate you. I have several brokers who do that for me. Some taught me when I had little or no money, and I am still with them today. What I pay a broker is tiny in comparison with what kind of money I can make because of the information they provide. I love it when my real estate broker or stockbroker makes a lot of money because that usually means I made a lot of money. A good broker saves me time in addition to making me money. Like when I bought the vacant land for $9,000 and sold it immediately for over $25,000 so I could buy my Porsche quicker. A broker is my eyes and ears in the market. They're there every day, so I do not have to be. I'd rather play golf. People who sell their house on their own must not value their time much. Why would I want to save a few bucks when I could use that time to make more money or spend it with those I love? What I find funny is that so many poor and middle-class people insist on tipping restaurant help 15 to 20%, even for bad service, but complain about paying a broker 3 to 7%. They enjoy tipping people in the expense column and stiffing people in the asset column. That is not financially intelligent. Keep in mind that not all brokers are created equal. Unfortunately, most brokers are only salespeople. They sell, but they themselves own little or no real estate. There is a tremendous difference between a broker who sells houses and a broker who sells investments. The same is true for stock, bond, mutual fund, and insurance, brokers who call themselves financial planners. When I interview any paid professional, I first find out how much property or stocks they personally own and what percentage they pay in taxes. And that applies to my tax attorney as well as my accountant. I have an accountant who minds his own business. His profession is accounting, but his business is real estate. I used to have an accountant who was a small business accountant, but he had no real estate. I switched because we did not love the same business. Find a broker who has your best interests at heart. Many brokers will spend the time educating you, and they could be the best asset you find. Just be fair, and most of them will be fair to you. If all you can think about is cutting their commissions, then why should they want to help you? It's just simple logic. As I said earlier, one of the management skills is the management of people. Many people only manage people they feel smarter than and they have power over. Many middle managers remain middle managers, failing to get promoted because they know how to work with people below them, but not with people above them. The real skill is to manage and reward the people who are smarter than you in some technical area. That is why companies have a board of directors. You should have one too. That is financial intelligence. 7. Be an Indian giver. The power of getting something for nothing. When the first European settlers came to America, they were taken aback by a cultural practice some American Indians had. For example, if a settler was cold, the Indian would give the person a blanket. Mistaking it for a gift, the settler was often offended when the Indian asked for it back. The Indians also got upset when they realized that settlers did not want to give it back. That is where the term Indian giver came from, a simple cultural misunderstanding. In the world of the asset column, being an Indian giver is vital to wealth. The sophisticated investor's first question is, how fast do I get my money back? They also want to know what they get for free, also called a piece of the action. That is why the ROI, or return on investment, is so important. For example, I found a small condominium that was in foreclosure a few blocks from where I lived. The bank wanted $60,000 and I submitted a bid for $50,000, which they took simply because, along with my bid, was a cashier's check for $50,000. They realized I was serious. Most investors would say, "Aren't you tying up a lot of cash? Would it not be better to get a loan on it?" The answer is, not in this case. My investment company uses this condominium as a vacation rental in the winter months when the snowbirds come to Arizona. It rents for $2,500 a month for 4 months out of the year. For rental during the off-season, it rents for only $1,000 a month. I had my money back in about 3 years. Now I own this asset, which pumps money out for me, month in and month out. The same is done with stocks. Frequently, my broker calls and recommends I move a sizable amount of money into the stock of a company that he feels is just about to make a move that will add value to the stock, like announcing a new product. I will move my money in for a week to a month while the stock moves up. Then I pull my initial dollar amount out and stop worrying about the fluctuations of the market because my initial money is back and ready to work on another asset. So my money goes in, and then it comes out, and I own an asset that was technically free. True, I have lost money on many occasions, but I only play with money I can afford to lose. I would say, on an average 10 investments, I hit home runs on 2 or 3, while 5 or 6 do nothing, and I lose on 2 or 3. But I limit my losses to only the money I have in at that time. People who hate risk put their money in the bank. In the long run, safe savings are better than no savings. But it takes a long time to get your money back, and, in most instances, you don't get anything for free with it. On every one of my investments, there must be an upside, something for free, like a condominium, a mini storage, a piece of free land, a house, stock shares, or an office building. And there must be limited risk, or a low-risk idea. There are books devoted entirely to this subject, so I will not talk about it here. Ray Kroc, of McDonald's fame, sold hamburger franchises, not because he loved hamburgers, but because he wanted the real estate under the franchise for free. So wise investors must look at more than ROI. They look at the assets they get for free once they get their money back. That is financial intelligence. 8. Use assets to buy luxuries. The power of focus. A friend's child has been developing a nasty habit of burning a hole in his pocket. Just 16, he wanted his own car. The excuse? All his friends' parents gave their kids cars. The child wanted to go into his savings and use it for a down payment. That was when his father called me and then came to see me. Do you think I should let him do it, or should I just buy him a car? I answered, it might relieve the pressure in the short term, but what have you taught him in the long term? Can you use this desire to own a car and inspire your son to learn something? Suddenly, the lights went on and he hurried home. 2 months later, I ran into my friend again. Does your son have his new car? I asked. No, he doesn't, but I gave him $3,000 for the car. I told him to use my money instead of his college money. Well, that's generous of you, I said. Not really. The money came with a hitch. So what was the hitch? I asked. Well, first we played your cash flow game. We then had a long discussion about the wise use of money. After that, I gave him a subscription to the Wall Street Journal and a few books on the stock market. Then what? I asked. What was the catch? I told him that $3,000 was his, but he could not directly buy a car with it. He could use it to find a stockbroker and buy and sell stocks. Once he had made $6,000 with the $3,000, the money would be his for the car, and the $3,000 would go into his college fund. And what are the results? I asked. Well, he got lucky early in his trading, but lost everything a few days later. Then he really got interested. Today, I would say he is down $2,000, but his interest is up. He has read all the books I bought him, and he's gone to the library to get more. He reads the Wall Street Journal voraciously, watching for indicators. He's only got $1,000 left, but his interest and learning are sky high. He knows that if he loses that money, he walks for 2 more years. But he does not seem to care. He even seems uninterested in getting a car because he's found a game that is more fun.